Chaos begins. I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story today, all hell breaks loose this week in what is a must-watch episode where we're going to make the case of why you need to get out now as the evidence is mounting that we're about to experience a massive correction in the broad U.S. equity market led by less than 10 stocks. Because this is our Sunday show, the show that makes you money, where we like to look at the technicals, momentum, and machine position to help you be a better trader and investor. And how would you like to make a quick 15 to 30% return? I'm going to show you an incredible chart setup with a sponsor for today's show, the Metals Company. You can find them on the NASDAQ under the symbol TMC. And when you see this setup, you're not going to believe just how easy it is to realize a quick gain. Stay tuned to the end of the show. I'll tell you more about the Metals Company and this incredible chart setup, or check out the pinned comment or description below. Now, let's head over to Goldman, where we make the case why all hell breaks loose this week. As we see now, the tactical flow of funds report in August as Goldman now remains on correction watch, and I'm going to show you why this could be a massive correction, far bigger than most believe. But what happens this week that matters? Well, what we see is 40% of the S&P market cap reports with planet Earth's most important companies. 4 of the 7 generals report next week, and the bar for them, for their earnings, could not be higher. So here you see by, of course, Friday's close, 40% of companies are going to be reporting, and this could set the stage of where equity markets are headed. And one thing that is going to be on net a seller, not a big one, but could accelerate to the downside, that is the systematic sellers in all scenarios over next week are indeed looking in a flat tape to sell 4.4 billion of global equities, which is virtually a very small number. But look at this over the next month. If stocks continue their downside move, they could sell 219 billion of global equities out of that 67 billion in the US, and that could cause stocks to have a beginning of what we're seeing as a massive correction. And this would also be on the back of volatility control product, as we see that vol sellers are indeed at max limits, meaning that if the market goes down, these strategies will sell stocks to hedge against rising volatility. And of course, as we know, August already is one of the weakest months, and it's only going to get worse. As Goldman says, the election is a headwind here, as the odd makers no longer see this as a landslide headed to former President Trump, as the S&P 500 has been super correlated to the win odds lately. Here you can see in blue the win odds and the S&P 500 going back to August of last year, and this has stalled the traditional election hedging up until July 17th, indicating we could see further downside risk to the market here. But one place you can find some upside, that will be, of course, the sponsor of today's show, because let's look at, of course, the clear problem as we see Microsoft reports on Tuesday, Meta, then Wednesday, Apple on Thursday, as well as Amazon. And these companies, as Goldman says, the guidance must be good, and beyond good, he says, he means it must be absolutely great. And something that's going to be great for your account is the stock for our sponsor for today's show, the Metals Company. Again, you can find them on the NASDAQ on the symbol TMC. Let me just show you really quick what this chart looks like, because what you see here in tan is a 200-day moving average, and in blue, the 100-day moving average. And you'll note, you can see in the past when it dipped below its 100 moving day average and buyers came in, it came right back up to it. In fact, it did that twice, and then the stock started tracking the 200-day moving average. You see that dip here got bought and came right back to the 200-day. If the stock does it again, I'm going to show you why there's buyers underneath it here, then a quick move to the 200-day is a 15% in return in your pocket. Back to the 100-day represents 30. Stay tuned to the end of the show, or check them out on the NASDAQ on the symbol TMC, because the risk right now is everybody's all in the biggest bubble of the largest 5 companies in history. Here you can see the market share is 29%, and this is a big warning that Goldman's flagging. In fact, the odds were perfectly priced, and now they're not, as pre-election jitters is common. And Goldman notes, U.S. and global equities typically see outflows heading into election before returning to inflows again in November. As we're making the case, it is time to perhaps get out now, take advantage of some of those gains. We're going to make the case of why from a technical perspective. And then if that goes to go down, the machines will sell into the worst month for liquidity, because we note again, as Goldman says, August is the worst month for equity flows because they usually go out as there are no predicted inflows for the entire month, and now we're 1 week away from that beginning. And let's take a look at our screens as we look at the S&P 500 ETF SPY. I'm going to make the case from a tactical perspective and a chart perspective why all these little dips that are getting bought are not going to work, particularly as you head into August. You see there's a lack of flows here. On the back, the 40% of companies are providing guidance this week, and they not just need to hit it out of the park for last quarter. They need to convince investors the next quarter is going to be great, and the evidence so far suggests it's not going to be at all. We take a look at momentum broadly. It is negative. The relative strength index has been headed to the downside right now at 46, moving off of that overbought territory at 70. The MACD, or moving average convergence divergence, has a negative cross. And these are technical signals, but a lot of people have trouble trading them because they get in late and out early. Well, we have a Momentum Timer Pro report that takes a look at these technical indicators, puts them all together, smooths them out, and runs a proprietary overlay that nobody else is doing. We have 3 consecutive daily sell signals. On the top, we also note that over a 1, 3, and 6 month period, momentum is maxed out. Now, we have no position on this. We have no stop loss set. We see Friday's closing. Our upside target, I don't think this is going to happen. I think the downside target is a case. So from momentum perspective, we're starting to see the market break down. Now, from a machine positioning, what do we see here? We model that on a fast and slow algorithm. You see our fast algorithms already showing machines are pulling off, but here's the best side. We tend to lead the actual machines. You want to get advantage, you want to beat the machines. We have a 30-day trial for both of our reports. We give you all the trades. I'm showing you right in this show today how you can trade the markets, and all of our returns are 100% duplicatable because we give you all the details. But let's check out the charts now for the SPY, because I want to make the case of why we're going to see a broad sell-off here. And right now, investors see this little pullback here down to the 50-day moving average in green, and they say, well, that's not really a big deal. Let's put on, of course, the volume here, and you can see the last big trade of volume is going all the way back over here into April. So that's where the likely path is here, but it could get much, much worse. What I want to do now is zoom out to the weekly, and let's go to the 10-year weekly chart. And we've been sitting right here at overbought territory on the weekly for a while. But if we go back into August of last year, what do we find? Well, we see the market sold off right into here. So we're coming to a period of illiquidity, and you'll note there's not a lot of volume behind this move, suggesting we could see a substantial correction. And you'll note going back to August of last year, what happened? Well, momentum stayed low, the technical stayed low, and the market looked like it was going to break down until it got to the 200-day moving average. We could see a massive pullback here because that rally was at least supported by volume, whereas this one isn't supported by much at all. Let's take a look at QQQ. We see the same setup here. Momentum negative, relative strength index getting near, short-term oversold territory. And this is going to bring buyers into the short term, and then they're going to get whiplash to the downside, because if price of the market does not turn around and these earnings don't knock it out of the park with amazing guidance, you're going to see further downside moves, and that will bring the machines in. And that sets up the case where everybody's selling into the weakest month of the year. In fact, our Momentum Timer Pro was all over that. We see momentum negative now for 8 consecutive days. Look at this on our fast algorithm of our machines saying they're max short, which indicates that the machines are going to be following our trend very, very quickly here. We're looking at our downside target of 439. Let's take a look at the chart, but let's zoom out again and stay at that 10-year weekly, because we know the same thing happened here. You start to see a sell-off going into August. It's right in here, was suggesting again the lack of volume. The initial target is right down here. You look at the volume, you see this little green spot. This is that sideways volume where support's at. There's not a lot there until you get down to around the 200-day moving average, and after that you could see it push all the way back down to where it traded. Could you imagine this back in January of 2021? Wouldn't that be a shock? But it's not unusual here, particularly heading into an election. There is a lot of risk for the markets. Everybody is bullish. Again, this may be the case. We're looking at the machine positioning and the technicals. It's time to take some money off because there are opportunities. Of course, our subscribers will be the first to know about them. Let's take a look at small caps. This was, again, the Trump trade. Everybody went in on this. Look for this to potentially now reverse momentum. Unlike the broad equity market is indeed positive, but we'll note where the big generals go, the little followers will go. Relative strength index sitting near overbought territory at 67. MACD's got a positive cross. 21 consecutive daily buy signals. Now you might remember our subscribers made money not on small caps, but on the mid caps. We'd previously made money on the smalls. Look at this upside target. Didn't get there. Downside target 208, but machine positioning long, momentum is long, and that is about to change in a major way. Let's take a look at IWM here. Let's pull it up on the chart. We see again on the weekly sitting near overbought territory. This rolls over. You're looking at a massive pullback, potentially all the way back down in here to the 165 range. Let's zoom into the 1-year chart. You see broad support is at 203. That is the line of stand. That breaks. We've seen this thing sell down easily into the 187 range, all the way down potentially to 161. So again, remember, flows are what matters here, and well, there's really not many of them. As we continue looking at what we've been following as the Bank of America recommendations, the banks, the regional banks took off. Of course, that last, I don't know. This was a rough trade because it meant you were already buying high, hoping it goes higher. But we tell our subscribers, you want to buy low. You want to look for stocks, say like the metals company, that have pulled back where you could make a return on other people that have already come in and bought. Here you see 24 consecutive daily buy signals, machine positioning long, momentum long, and yet people chased this to the upside anyways. Let's take a look at KBE. Here you see it just going vertical, Mav, and that is just not what you want unless you were already in it. Look this to pull back. It's got upside potential right here at 55.48. It is indeed sitting in massively overbought territory. This one looks to pull right back down into support, which is again right above that 45.97 level where that volume profile line is. That is a major line of support. The problem is, from a macro perspective, the banks don't look good. They don't do well when the Fed cuts rates, but investors, they think otherwise. The charts for now suggest this is massively overbought. How about emerging markets? The warning signal here is about liquidity, and emerging markets is a great indicator of that. Momentum's negative. You see the relative strength index cooling down to 43. MACD's got a negative cross. We picked up some sell signals starting last week. Again, we don't have any positions on this because it makes perfect sense. If you're going into the worst month of the year, what you want to do is actually have a lot of ammunition, because we're seeing in our reports there's going to be a ton of opportunities, and you're going to want to grab those. Here we see upside target 43.83. We hit our downside target. The next move is to 40.41. Look at this. Machine positioning showing the fast algorithm short, the slow algorithm selling down, momentum clearly moving to the downside. Let's take a look at EEM here. As the case is where it goes, everything is going to follow. And of course, it'd be helpful if I could find it. There it is. You can see EM is rallying up here into the resistance, and now it's breaking down below potentially that 100-day moving average in blue. There's the line in the sand at 39.78, just below our target. Let's zoom in. I'll show you where that is. There is 42.23. That's a 6-month volume profile. Price is starting to hold, trying to hold here. If it doesn't, the next move right down here. This is support right where buyers were at before. A breakdown here is not good. Now, if you're wondering what that shaded spot is, you get below that. That's where you see financial crises. EEM, leading indicator that things are indeed rolling over here. Let's continue on, take a look at the bond market. Here we turn to Nomura saying, look, over 111.64 to buy, under 110.85 on the 10-year to sell. The 10-year closed at 111.22. So no movement really on the bond market, but seasonals here for August and bonds, they're not strong either. In fact, we see equities and bonds tend to sell off in August into September. But hold fast, as Goldman notes, that around November for an election, it is a big time to buy bonds, and in a big way. Let's take a look at TLT here. Momentum's positive. Now remember, this is one we did not put stop losses on. We recommend everybody use those. Control risk. We're only down 1.07%. We keep dollar cost averaging anytime our signals tell us to. This Friday's closing just under 93. Upside target unchanged. I've revised our downside target to 90.03. Again, remember, August, terrible month for stocks and bonds. Momentum remains positive. The question is, can it hold here? We're seeing one daily buy signal that's not significant. We've got a sell minimum on the 1 month window, suggesting bonds could be in for a little more pain here before we see a turnaround. Let's take a look at the chart for TLT, and what do we see? It just runs right up here. The 6-month volume profile was right above. Let's see if we can find it on the 1-year chart. There it is. And you'll see every time price ran right back up into this 1-year volume profile line, sold off, ran into it, sold off. If there is a rally here, look for, of course, those sellers to be there. Target then pushes us right back down in here to this 90 price level is the next downside potential move. For August, could go a little deeper. Keep in mind, again, August, not a great month for stocks or bonds. But how about gold? Everybody's gone bullish on gold. Now back on June 21st, we told our subscribers, buy it open. Here's your upside target. Set your stop losses. And we just cashed in this week with a nice little 1.58% return. Because guess what? Seasonals for gold in August, they're not good either. And so everybody's going to look for opportunity. And those who are going to find it are going to be our subscribers. I'm going to give you a hint. It's in the commodity space, but not gold. It's in other spaces. The only way you're going to find out is you got to subscribe. And the best part is you get a 30-day free trial. And while you're in there, check out the metals company under the symbol NASDAQ TMC. Here we see gold, relative strength index cooling off down to 51. MACD's got a negative cross. The sell signals, only 2 of them. But watch out, momentum is stretched alongside over the 1 month window here. We're out of this position, setting the downside target at 215. Even the machine positioning is going to start selling off here into a month of low liquidity. And of course, that means gold is not exempt. I know everybody says gold only goes up, but let me show you this. As we look out to the weekly chart here, and what do you see? Back in August, what happens? You start to see right there the peak of gold, sell down. Hey, what's here? You see April into August, a sell down. You see it happen again, April into August, sell down. Well, this is one time we're not seeing that April to August move. Watch out, it could push gold all the way back down into support. That would be 184 from current price of 220. Could you imagine that? Well, a lot of people say they can't. But history says no liquidity, no buyers. We got a problem. How about GDX? We put the same trade on June 21st. And look at this. Our stopped out with a nice 5.38% gain. Again, all of this duplicatable. You can take advantage of this. Where gold goes, the miners follow. But how about the dollar? We have the Fed meeting this week, and on the 30th, they're going to announce policy. But look at this. Our CTA Time Pro, long the dollar. Our, of course, MOM Time Pro, short the dollar, both up slightly. Now, we've raised our stop loss. This is the actual stop loss level our subscribers see on our CTA Time Pro. We look at the chart. We're not confident either direction from a macro perspective. I'll tell you, the dollar is indeed headed down, but from a short-term perspective of the Fed, it could go higher here. We could see a little move up in here to around the $29 level. If that's where it heads, then we're going to tell our subscribers to raise their stop loss levels and the rest of them to hold on till they're dollar short, because that means, of course, we know when the Fed cuts, then all things start to come unwound. But something we think is there's a huge opportunity for you to generate a 15 to 30% gain in the very short term. That is a stock for our sponsor of today's show, the metals company. You can find them on the NASDAQ under the symbol TMC. Let's take a look at them. Everything you need is in the description and pinned comment below. And the metals company is an explorer of lower impact battery metals from C4 polymetric nodules on a dual mission. One, to supply metals for the global energy transition with the least possible negative impacts on the planet and people. And number 2, trace, recover, and recycle the metals we supply to help create a metals common that can be used in perpetuity. The company runs through its subsidiaries, holds exploration and commercial rights to 3 polymetric nodule contract areas in the Pacific Ocean. And let's take a look, because this is impressive. Why should you explore the seafloor? Why is the metal companies there? Well, that's where most of the plants, nickel, cobalt, and manganese is. You can see seafloor resources just far exceed what we can get to on land, and it's easy to get to in comparison. As nodule composition is well suited for battery metals, as you can see, the seafloor nodule has copper, nickel, cobalt, and manganese. These are everything you need for electric vehicles and the electric future that governments are pushing. And how about this? Their estimated resource alone has the potential to supply the U.S. demand for nickel, cobalt, and manganese. Look at this, a metals company versus the Eagle Mine and Talon Metals. This is unprecedented, suggesting there's going to be a huge opportunity to invest in this company, not just over the short term, but over the long term. And they ranked in 2022 and 2023 as the #1 and #2 largest undeveloped nickel projects on the planet, the high-grade alternative to Russian and Chinese funded supply. And you can only think about the politics here that, of course, we're going to look to cut off foreign supply and make sure that we can handle it our own. And if you don't think the government's aware, well, they're already behind this, as recent headlines point to increasing U.S. interest in prioritization of marine minerals to support national and energy security. Here you can see from a Wall Street Journal article back in March, as U.S. lawmakers push for deep sea mining funding, a new bill, and Political ran an article too, as former national security defense officials push for ratification of UN treaty to boost deep sea mining. And now let's take a look, because based on SEC compliant initial assessment, NORI-D project estimated at $6.8 billion net present value. That is impressive. So what we see with the metals company is a huge opportunity. Now let's take a look at the short-term opportunity in their stock. But you can keep in mind there's a much bigger opportunity over the long term. Let's go back to that chart we looked at the beginning of the show, and let's just review. We see that 100-day moving average in blue, and we can note that stocks tend to follow moving averages. Sometimes they switch, and metals company did. It swapped from the 100 to the 200, but you see what pulled back off that 100-day moving average, and then buyers stepped in, creating a huge opportunity to get back to the 100-day alone, and then it broke out above that. The second time it happened here in the last year, or 2 years that is, it did it again and just skyrocketed. Then it started tracking the 200-day moving average again, creating an opportunity here, and jumped up, broke the 200-day, creating some nice upside return. And now we're seeing that setup again. A return to the 200-day would be a 15% realized return. To the 100-day, 30. If it breaks out even higher, well, who knows where it can go. Let's zoom in here. You can see very clearly the last time this happened, and you can see it just shot through the 200-day moving average and went higher. It pulled back, held the 200-day, and rocketed up again for investors that held on to it. Now you're seeing the same setup begin, and this breaks through this level just above, right around $1.42. It breaks through there. You're looking at a potential of hitting $1.62, maybe even all the way up to $2 a share. That would be pretty impressive on a stock that's trading right around $1.16 after Friday's close. But here's the evidence. If we zoom into the 5-day chart, what do you see right here at $1.20? Buyers coming in right below here. That's that volume profile line, suggesting that you're not the only one who sees an opportunity here. A lot of big players are seeing opportunities in the metals company, and now it's your opportunity to get in as other buyers are putting a floor and setting up, again, a potential 15 to 30% plus return for you. Again, you can find them on the NASDAQ under symbol TMC. And as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.